With great delight, introduce our next speaker, Mr. Binod Shankar, podcast host, the Real Finance Mentor, and board member, CFA Society Emirates. Sir, we extend to you our virtual floral welcome. Sir is a CA and CFA charter holder. After a 17-year corporate career, he quit to co-found and lead Genesis, quickly building it into one of the Middle East's largest financial training companies. In 2017, he successfully exited the business with a sale to Kaplan Inc. Sir has taught over 4,000 CFA candidates across all levels over the last 12 years, establishing a reputation as a top financial trainer and mentor. He is a frequent market analyst on CNBC and Bloomberg, board member of CFA Society Emirates, and the host of the Real Finance Mentor podcast, which focuses on insight and inspiration for finance careers. It is indeed an honor to have you, sir. May we request, sir, to kindly enlighten the young minds?
Thank you, guys. Can you see my screen?
Yes, sir. The screen is visible.
Great. So thank you for the invite today. And I think the work has already been laid. The foundation has already been laid before I came on board, because I think Vikas and Vishal both talked about the precursors to what I'm going to talk about. I think topics like what you should be doing at this stage of your life and career, and how markets work, macroeconomics, interest rates have all been beautifully covered. So I'm going to dive into what my agenda is for today. And before I go there, this is what I was told, right, by the organizers. So they want me to talk about opportunities this pandemic has sown and where we can look for value in this decade. What are the various industrial shifts that our society will witness in the coming years, and how can we take our bets on them? So I'm going to drill deeper than the previous two speakers. Like I said, there's a well-structured program. And I'm going to talk about trends, stocks, and such matters. So I'm going to tell you how to make money, basically, in detail, right? You can give me a cut later. Right, so that's the agenda. Now, the prologue is basically, I focus on, I'm an investor. I'm an active investor, mainly in US markets. I'm not a trader, so I invest for long term. I look at key secular trends, key secular growth trends that are happening in the US and around the world. Of course, US is the biggest and most innovative market you can find. So naturally, you find lots of fantastic companies and lots of value there as well. Right? Now, pre-pandemic, some of these trends have been accelerated by COVID. They didn't come up because of COVID. It's always there, but COVID has basically pushed them out and made them more visible, and the company is more profitable, right? Very importantly, I'm not going to talk about theoretical high-level themes. I'm going to talk about investable themes. Investable themes basically means that identify well-managed, fast-growing companies that have the ability to be a leader or already leaders in their field. Listed companies, of course, where you can invest in, not private equity, but basically public companies. Many, of course, have rallied, as you're probably aware, since March 2020, and some of them are a bit expensive, but this session is not about what you should buy. This is not investment advice on a stock basis. This is more of themes and trends, like I said earlier. And even then, I'm not going to talk about all the key secular trends because time does not allow me to talk about those. I'll talk about trends that I've researched, where I've personally invested in, that I like. So this is not a full shopping list of all the possible themes, right? But very importantly, these trends represent what we call the new economy, or most of what represents the new economy is there in these trends, right? And these companies. So it's important to understand this and where we are going. And like I said, if you get in early or even now, there's a good chance of making good money on these themes. So with that prologue, I'm going to dive into this presentation on investable trends, right? So what are the key themes here? Well, there are 6 themes that I want to talk about. Cloud computing, right? There is fintech, is e-commerce, video gaming, cybersecurity, and robotic surgery, which are all present in broadly and deeply in the US markets and also India as well to a lesser extent. So these are very interesting themes, and I'm going to talk about each theme. I will talk about what are the key drivers that are driving growth in those segments, and I'll give you examples of companies that are doing well, and I will continue to do well as well. So the first would be, of course, cloud computing, which sounds a bit vague, but actually it's quite an interesting theme that's been driven by the explosion in remote working that you have seen in the last year. One reason, of course, one main reason was COVID, but remote working had already been picking up before that, right? Also, virtual collaboration among teams, between teams, multiple location has just made cloud computing, which is basically storing massive amount of data on the cloud of the site, right? Also has a huge advantage of avoiding multiple physical security layers of on-site storage. And of course, if you have a cloud computing vendor, then you have this convenience of scaling up and down without having to put up physical infrastructure yourself, right? So the big names, of course, you're well aware of these names. You probably didn't know that these 3 guys were also the 3 giants of cloud computing. You have Google Cloud, you have Amazon Web Services, AWS, and you have Microsoft Azure, who are the top 3 boys in cloud computing, which can only increase. This trend can only explode with time. The second would be fintech, which is a very broad area, which you have seen some bigger players in India as well. Now, fintech is increasing, is picking up speed because of some very interesting shifts from traditional banking services to mobile apps. As the old banks, the commercial banks, the stodgy banks, they are being outpaced by the explosion of innovation in mobile smartphones and smartphone apps, right? Also, you have to understand that in many poor countries, including India as well, there are about nearly 2 billion unbanked people, right? Who are skipping over the entire PC stage into smartphones. That's another driver of fintech, right? And of course, everyone knows about the fact that smartphone penetration rates in India have gone up significantly the last decade or so, and it's increasing around the world, right? And of course, mobile e-commerce platforms are coming up almost every other week. You see them in India as well, and we'll talk about e-commerce later in this presentation. So all this basically makes, along with the expansion of contactless payments, which is seen a big jump due to COVID. People don't want to handle cash. They don't want to go to a store. So click and pay, right? Use credit cards, etc., etc. So what are the big names here? I think the last name, PayPal, will be very familiar to you. The first 2 may not be that familiar to you. PayPal, of course, is huge. You've heard of Elon Musk, the PayPal mafia, Max Levchin, etc. The first one, Stone, is actually a fast-growing Brazilian fintech company. And Brazil, of course, is a big and growing population where, again, you have a lot of unbanked individuals who want to do e-commerce and a lot of things where the banks are not that efficient. So Stone is a Warren Buffett pick as well, by the way. Warren Buffett has invested in it. And the one in the middle, Square, is probably better known. It's probably as old as PayPal. It's doing very well as well. PayPal has recently seen some interesting developments, including allowing Bitcoin payments to be made using its platforms. Its Venmo platform is already very popular in the US. So that is fintech. In India, of course, you have Paytm and some other names as well, right? And fintech can only increase. In fact, they might be giving banks a run for their money. And the biggest threat to banks is not interest rates or regulation. It's probably the rise of smart and agile companies like PayPal and Paytm. Right? The next development, of course, is e-commerce. You cannot not talk about e-commerce. From food to phone to clothes, we always use e-commerce, right? It's become a part of life. But the interesting thing is it's still a tiny fraction of total consumer spending, right? Most people still go to a store and buy things. Overall, there's still a lot of scope to grow. Again, smartphones are really driving this revolution, right? Rising smartphone penetration rates. We talked about that earlier when we talked about fintech. And of course, I mean, 10 years ago, it'd be hard pressed to find people in India who would be willing to pay using a mobile, right? I still remember in my time, right? 2005, 2010 even, you would not want to pay using credit cards on the phone or online, right? Forget about even phone. Now I think it's just normal. It's become very accepted. It's become safer. Frauds are less. People are more comfortable. And you've had this huge explosion of online payment platforms and e-wallets, whether it is Venmo or Apple Pay or Google Pay, or like we talked about the Paytm example, or other lots of other wallets are coming up, like Stripe, for example. So we have all these wallets that just facilitate e-commerce, and of course, lots of vendors have come with what you call omni-channel capabilities. Omni-channel basically means offline and online. And a classic example, if you look at the US, would be the massive retail company called Home Depot and also Walmart, who have been traditionally known for the last many decades as for their in-store experience, but have now rapidly shifted to online ordering and what you call in-store delivery of fulfillment is done on a curbside pickup basis. You basically order online and you go and pick up your delivery or have it delivered to your home, right? So this is again expanding a lot. The big names, of course, Amazon is household name. I don't need to tell you what these guys do. I mean, these guys do pretty much everything, right? From digital advertising to e-commerce to their own fulfillment arm and cloud computing, right? The other two may not be well known to you. Mercado Libre is the largest e-commerce platform in Latin America and is growing by leaps and bounds. They're also a fintech player, by the way, and you see a lot of overlap here, right, between fintech and e-commerce because a lot of synergies in this segments. And C is the biggest e-commerce player in Southeast Asia, especially Singapore, Malaysia, Indonesia. And they also have a gaming platform and they also have fintech. So again, a lot of synergies you see here, right? And all these three companies, of course, are listed on the NASDAQ. So you can have a look at their track record and buy them if you want to. Video gaming. Now, I'm not a video gamer myself. I'm too old for that. And even when I was young, I never played video games. But this is a very interesting area, which is also seeing massive growth. Why? Well, one, the creativity in game design, right? If anyone has watched Overwatch and Fortnite, and I've seen some clips, the level of creativity, the level of graphics, it's become much more cinematic, much more immersive, much more realistic, right? Thanks to some massive improvements in graphics technology. And of course, we're seeing a demographic shift, rise in female gamers, growing mobile connectivity, and you may not believe it, but actually it's a newfound way of staying in touch and meeting people and making friends, right? Especially in these pandemic times or post-pandemic times when you can hardly step out safely. Now, who are the big names in video gaming? The first one may not be that popular, but Zynga is a massive mobile video gaming developer. Activision Blizzard, of course, everyone knows for their big names, right? And the one that I like the most, I personally like the most, right, is NVIDIA. NVIDIA is probably one of the most innovative companies on the planet. It's run by the same guy who set it up, Jensen Huang. And it comes out with new chip designs every now and then. They are very hard to beat. AMD, Intel will find it very tough to catch up with NVIDIA. They specialize in designing chips for data centers, for cryptocurrency mining, and for gaming. Their graphic, chips are probably the best in the business, right? So these are three names I thought about, and the other names as well, of course, like Electronic Arts or Take-Two Interactive that are big in video gaming, right? And some new names coming up. But this came to my mind as investable names. Of course, cybersecurity has become quite important with all this happening, fintech, e-commerce, cloud computing, video gaming, working from home. It's become more and more, we have become more exposed to attacks, right? Cyber attacks. So explosion in remote working over the last year, especially, workforce adoption of digital tools to support remote work, increased digital transformation. Companies are increasingly going digital. I gave example of Walmart and Home Depot, but I can give you many other examples, like Nike, for example, the massive athleisure giant, has achieved significant success with its direct-to-consumer online initiatives over the last 2 years. And it's cutting out Nike stores because that's a very old-fashioned, physical, not very scalable or profitable way to work these days. So you're seeing all this transformations happening, which again exposes the company's supply chain, etc., to cyber attacks. Attackers are getting increasingly sophisticated, right? The hacks of old are gone, and now they have devised new methods of basically disrupting or stealing data, right? Or processes. And of course, with the Internet of Things, we have lots of devices and everything gets connected. The risk of being brought down by a cyber attack just increases exponentially, right? Companies have become very aware of this. Three big names in the US market, Zscaler, Okta, and CrowdStrike. Now, what's very unusual about cybersecurity is that unlike e-commerce or maybe even fintech or cloud computing, especially, it's not like a winner takes all market or even a duopoly, or three or four major players. Because cybersecurity is so specific and so complex, you can have different companies actually achieving fantastic success, and you can invest in each of those. You don't have to pick one, right? Or you can invest in a cybersecurity ETF when you're not sure and you want to have a diversified mix of stocks. So my personal favorite is CrowdStrike because they specialize in endpoint protection, which is very suitable for someone working remotely, right? So we talked about tech so much, and you're thinking, okay, this is all about tech. Is there any other sector? Well, there's one more sector, which is robotic surgery, which is actually healthcare mixed with tech, right? You can call it almost like health tech. Now, robotic surgery is not a robot doing surgery, it's a surgeon using robots. And the advantages here are massive. Precision, you have more flexibility, and you have more control. But something very important is that these surgical procedures are minimally invasive. Now, what that means is that the cut that is made on the skin is smaller, which has and that has massive implications, because it means that less chance of infections, less time spent in hospital, less cost, less insurance claims, less chance of being sued by the patient, etc., etc. I can go on and on, right? That's all achieved with robotic surgery. And the best thing is that market penetration for this secular growth trend is still in the mid to low single-digit range. It's expanded in the US and some developed markets. Once the machines get cheaper and more people are trained on it, which is happening in a rapid pace these days. And once doctors get over the hurdle of not using their hands, but using a machine, which almost functions as the extension of their hands. Once they get past that mental hurdle, it'll pick up, right? So this is, and the biggest players in this sector, the biggest player I would say is a company called Intuitive Surgical, which makes a machine called the Da Vinci. It's a big, almost like a MRI kind of machine that does all kinds of fancy, sensitive surgeries. Zimmer Biomet is a smaller company. Both are listed in the US. Right? So we talked about the 6 trends. Now you're thinking, why is Binod focusing so much on tech and everything is tech, right? And you probably know some of the answers, but let me sort of list down why I like tech and why millions of investors like tech and why millions of, why many private equity investors and venture capitalists fund tech, right? And since I'm a finance guy, I'm a chartered accountant and a CFA chart holder, I will devote some time to the finance aspect of it. Firstly, it's much easier to scale tech, right, compared to brick and mortar. That's obvious. Low working capital. The amount of money is stuck in inventories and receivables and other aspects of working capital is far less for tech. I mean, the classic example, which is extreme, of course, is Amazon, right? Do you know that Amazon works with negative working capital, which means its current assets less than its current liabilities because it's getting funded by its suppliers. You buy from Amazon, you pay cash, but Amazon pays its suppliers much later. Now, that's a beautiful business because you don't need to go and borrow money or get some capital infusion to fund your working capital. It's fantastic. You can't always do it, but a lot of tech businesses can do it. You also have high operating leverage. Now, you heard about financial leverage. Operating leverage basically means you have basically high fixed costs but low variable costs, which means that once you pass a certain level of production and sales, the amount that comes from revenue to your bottom line is huge, right? Or from revenue to your EBIT, your operating profit is huge, right? And a lot of companies from Microsoft, Amazon have lots of operating leverage, especially when you make software that kicks in. And of course, because they scale faster and they generate a lot of revenue, because they need less working capital, because their variable costs are low and their fixed base is fixed, they need to borrow less. And because they need to borrow less, they're less dependent on capital injections, on banks. They have less interest costs, relatively speaking, and they're less tied by banking or lending covenants. And very importantly, they have high margins. I mean, if you look at the operating or gross margins of Facebook or Google or Amazon, you'll be stunned, right? They are not like anything you would see in manufacturing or trading or services or any other sector. And of course, one thing I love about these companies is they are less impacted by macros. What do you mean by macros? Interest rates, energy prices, exchange rates. These affect the oil and gas and energy and banking, financial services, manufacturing industries, right? Because their inputs are massively affected by these macroeconomic factors. Not so tech so much. If you're not buying and selling stuff, if you're not borrowing money or lending money, then you're far less impacted by what happens around you. I'm not saying not impacted, I'm saying less sensitive. I love that for that reason. And of course, one reason why a lot of investors like tech is a lot of them are founder-led. Now, founder-led companies are good to own because the founder is basically, with this idea, is taken from what you call private to public, grown it, scaled it, and is running it for the past many years. And as a result, whether it is Facebook or Amazon till recently, or some other companies, you'll find that the DNA, the culture of the company hasn't changed much at all. And that is one key factor, if not the key factor, behind the company's success. So NVIDIA is one company I like because Jensen Huang is still the CEO. Bezos is the executive chairman of Amazon, right? And we can go on and talk about a lot of other companies as well, right? So that's why we should love tech and why I love tech, right? And not because tech is a fad or a fashionable, because every Tom, Dick and Harry is investing in tech, right? Now, people talked about books, right? I think the two speakers earlier talked about books. I think it's a great point. I think I've learned a lot from books, whether it's regarding my career or studies or personality or psychology or investing. And I think I read about 4 to 5 books a month, about 40 to 50 books a year. And 4 books that I picked for you guys, right, that I think you must read. Howard Marks is a billionaire hedge fund investor. Mastering the Market Cycle is a beautiful book on psychology and the process of investing. The Man Who Solved the Market is about Jim Simons, probably the most consistently successful hedge fund manager in the universe, who is also a quant, is a genius. And Gregory Zuckerman tries to decipher the magic behind the madness, or the method behind the madness. The most recent book I just finished reading a few days ago is Psychology of Money, which is by Morgan Housel. I think if you ask me which is the book that made the maximum impression on me, it's this book. Because he doesn't talk about interest rates or beta or CAPM or price to earnings ratios. He talks about the fact that you look at all these factors, but ultimately we make investments based on what we think. And what we think has nothing to do with all this, what we learned in CA or CFA. It is to deal with a lot of other things. Psychology of Money, Timeless Lessons on Wealth, Greed and Happiness is a must read. And the last book, not the least, is The Four by Scott Galloway, The Hidden DNA of Amazon, Apple, Facebook, and Google. It goes into how exactly these guys became successful and how they retained their market dominance. But the most interesting part about this book is the last about 30, 40 pages, where he talks about the before and you. He talks about how you should develop yourself in terms of career, in terms of investing, and become successful in the future. So please get hold of these books, very valuable reading. Like was mentioned earlier, I do run a podcast. It's for finance careers. It's called The Real Finance Mentor. I've run about 21 episodes so far. And you can go to my website, therealfinancementor.com. And I'm also on Facebook, Instagram. On LinkedIn, my name is Binod Shankar, and you can find me there. I am quite active on LinkedIn with about 35,000 followers, as also on Instagram. A lot of information, not so much on investing, but on careers, on CFA, MBA, CA, psychology, upskilling, employability, etc., etc. So I hope you will log on and listen to the podcast and let me know what your feedback is as well, right? And that brings me to the end of my session. So over to you guys. If you have any questions, happy to answer them.
Thank you, sir. Certainly, your address goes a long way in inspiring us to strive hard and achieve greater heights. Now, I would request Milan to take some of the questions from the chat box.
Okay, so the question that we have was, what kind of was the inspiration that you had, because you were executive director and then you went on to build your own brand from scratch. So what would you say was the inspiration and how was the journey about that?
So the question, can you speak louder? I think your question was, what was my inspiration to leave corporate life?
Yeah, corporate life and to pursue your own brand building, that in that sense.
All right, that's a good question. What's your name?
Milan.
Vedant. So I spent about 17 years in corporate life, right? In audit, consulting, real estate, banking, and I turned 40 by then. And then you realize that, there's so much more to life than titles and salary and having a corner office and managing a big team or whatever. And I also love teaching. I had a passion for teaching. I started teaching when I was 26. When I finished my CA, I was teaching CA intern and CA final at that stage after I qualified. So I knew I was good at teaching. I knew I liked teaching. I knew I loved the freedom of being a trainer. You own that space. How you teach is completely up to you. And that was the pull part, right? The push part was I didn't like the bureaucracy and politics and stress and certain elements of corruption of corporate life. So the push and pull made me quit and start my own company along with two other co-founders, both of whom are CFA charter holders. And that was the inspiration. And it was not about making money. I never thought of exiting and selling it to Kaplan, which, as you know, is a huge education and publishing giant. It was simply, do what you love to do in a free atmosphere, and let's see where it goes.
Okay, so one of the questions in the chat box is how to find a company with a competitive edge. And I would just like to add upon the question, like in recent times, we have seen that many investors kind of have this fear of missing out when we say that if one, let's just say influential investor is having an investment and people tend to follow it. So do you think that is the rational way to find it out, or what would you suggest?
Again, to understand the question you're asking me, is FOMO a good investing strategy?
Yeah, so basically to follow a big investor would be an good investing strategy, or what would you suggest?
Well, the interesting question. So I follow investors. Everyone follows great investors, right? Whether it is David Tepper or Seth Klarman or Warren Buffett or others, right? Now, it's good to know what they're doing, but you have to be very careful because their objectives, their resources, their strategies can be very different from yours. So I follow them, but I rarely invest based on what they do because of the reasons I mentioned earlier. So Warren Buffett, for example, has bought what you call JP Morgan or Coke or Bank of America. I wouldn't buy any of those stocks because I invest in growth stocks. Warren Buffett never looked at tech stocks till recently when he bought a massive stake in Apple. I've always invested in tech stocks, including Apple as well. So it depends on your personal investment style, your risk return and tolerance, your return requirement. So I think, yes, following great investors is a great idea, but be extremely careful to not mimic what they're doing. Because listen, I mean, they've got billions, right? They suffer a loss of 500,000, it's okay. You suffer a loss of that magnitude, you're wiped out. I think mimicking is not a good idea. Understanding the rationale is a good idea.
Okay, thank you so much, sir.
Thank you, sir. We would request Milan, executive at Nivesh, to present a memento to sir.
Okay, I believe that was a really insightful talk by Binod, sir. He provided us a deep insight about what the financial world is up to and what exactly would be the way forward. So I, on behalf of Team Nivesh, would like to present this e-memento, and we are really grateful to have you for this session, sir. Thank you so much.
Thank you so much, guys. I just want to say that I was contacted by Manan Jain of your team, and I've spoken at various events organized by universities, and I found this event probably the most impeccably organized and structured in terms of what each speaker had to say. So good work to everyone behind this. And I wish you all the best in your career and in your investing endeavors. Thank you so much.
Thank you, sir.
Thank you so much, sir.
Thank you so much, sir. It has indeed been a fruitful session and has surely added a lot to our knowledge.